What is up, traders? Sean here, Blackhawk Trading. Going to get into a video fair value. I hear a lot about fair value gap, and I hear a lot about price coming back into the value. You guys need to understand that in the auction market theory, there is always going to be price discovery and then price rebalancing and then acceptance. That's really all it is. When there's market makers that have to hedge their positions and a market breaks out and they fuel that breakout, that's price discovery. That's price going to a point that hasn't been in a while or ever. And we will start to see where the buyers and sellers will agree upon, and then price will then pull back. So let's just go over fair value so you guys can understand what fair value really is and why I personally think that ICT's fair value gap is not named correctly, but we're going to show you order flow and how all these concepts are actually from order flow. They're just rebranded and repackaged for ICT. So fair value. Fair value in the markets is consistently shifting price levels where buyers and sellers agree where the asset should be or should trade. Essentially, it's the equilibrium between supply and demand at that very moment. The market is an auction system and it is always seeking this balance point, right? Equilibrium, homeostasis, something where either an animal or price is going to feel accepted and equal and balanced. All right, that's equilibrium. So in the futures, ES and Q, fair value is reflected in the value area of the volume profile. It's 70% of the volume traded for that session or that week. So if we take a look at the chart on the left, I have mapped off a few. This is just one of the charts that I use. I use 3 charts because I don't want to overwhelm myself with everything on one chart. So this chart is my chart that I use for actual order flow. So this is where I get my bid and ask profile when I zoom in. So let's zoom out. We just get the candles. So really all I use this chart for is value areas of the high, the low, and the point of control for each subsequent day. So if we take a look here, this is one day from left to right, the 2 blue lines, and then this is my value area. So within these 2 gray lines right here is where 70% of the volume for the day was traded. Anything outside of these lines, so if we mark off the session high here, we mark off the session low here, right? We have the high and the low. This box is where 70% of the volume was traded. So if that's the case, fair value is saying that everything within this box could be agreed upon within buyers and sellers because buyers and sellers transacted there before just fine. So now when we see these areas down low that are outside of the value area, so this whole area that's below the value area low, what happens to it? It starts to come back into value area, seeking equilibrium. So as this price moved down, there was solely sellers. You need buyers to absorb this price. As price was dropping, buyers were nowhere to be found. So what does that mean? As price goes lower, the buyers need to start to step in for price to move up. So now for price to agree upon a point, you need to have buyers and sellers agree upon that price. When there's only one party transacting, then price cannot stay there any longer. So actually, if we scroll in, if we zoom in to this low, we can take a look at what actually happened on the bar. We should have failed auctions at the lows, which is what we have. We have a failed auction right here. No one was hitting the ask side. So there was no buyers to complete for the sellers. There's no counterparty to continue in price. So once that happens, you're going to get 2 failed auctions here. There's no more buyers at this level. How are you going to keep going lower when there's no buyers to buy the contracts from the sellers, right? It's a zero-sum game. For every seller, there needs to be a buyer. So if you're selling, there has to be somebody that's buying it from you. If there's only sellers and there's no buyers, then price cannot stay here. So then price will then start to move up, right? If there's no more buyers down here, it's going to go look for buyers. So that's what the general rule of fair value is. 70% of the volume traded either in the day or the week. So I have both of those set up. So what I like to do is to have the dailies already done, right? I don't use the volume profile where you see all the nodes. I just need to know where's my high, where's my low, where's my point of control, and that'll give me a reference for the next day. So if I'm trading on today, which is right here in this square, this is the value area here. If I'm trading here, I definitely want to look back to see where yesterday's point of control is, yesterday's low, value area low, and yesterday's value area high. And these will give me reference points for 70% of the volume that was traded yesterday. So this point of control actually lines up exactly with the point of control of today. That's a little hint, right? Price will probably come right back to this point of control and make a choice. They're outside of fair value right now. And look what happened last time we were outside of fair value. Last time we were outside of fair value, the market wanted to come back into fair value, right? Not too hard to understand. Very simple. I keep the session, value area, high, low, and point of control. I also do it for the week, but that's on my other chart because I don't want to start adding so many lines to here. All right. So in options, fair value ties into the premium pricing, the mix of intrinsic, extrinsic value shaped by the volatility, time, and demand. That's the Black-Scholes model, not too important. And then in equities, price constantly moves towards the level where aggressive buyers, where they're lifting the offer, and aggressive sellers, they're hitting the bid. They're both satisfied, right? They're not going to drag it too far high. They're not going to take it too far low. They're satisfied where they're at, equilibrium. So in the ongoing auction, fair value is just simply the current winning bid for the moment. So like I said, price discovery, we have acceptance, and then we have reversion. When we're in price discovery, price leaves the balance area. Say it runs the high or yesterday's value area high, and it explores new acceptance, right? Order flow shows stacked imbalances, whether it's high or low, strong delta supporting your side, and then orders getting pulled as price starts to push up or down. So as price is pushing up, you want to see those offers getting pulled, allowing price to just keep flowing. Now we have price acceptance, which is the balance, one on both sides. Once both sides participate, the volume builds a new zone. So if we start to move out, if we look at the chart on the left, if we start to move up here and we start to create a zone where we're just consolidating, this becomes the new balance area. We've left this area, we've created volume. You'll start to see the volume nodes here come out like this, and then they'll be flat here, and then they'll come out like this, right? This will be your zone where everything pushes through right here. Everything will push through, boom, we'll come up to this area, we'll create balance, buyers and sellers interacting, right? And then the volume node will then be able to be shaped. And then reversion to fair value is when we're too extended, we trap traders. So here on the left side, if you look at this, we've trapped all these short traders coming down. So now we're going to have reversion back into fair value, back into this zone. We trap the traders short and they get stopped out. So for trading, the trading implications for the premium sellers, we favor entries near the point of control because that's when the moves start to happen, or a high volume node where mean reversions are usually the strongest. So if we're here at the lows and we want to sell puts, it's a good idea to sell puts when we're outside of the value area, and that it's more likely. So if we're here right now and we're outside of the value area, let's not think that it's before the open, right? Say we're already middle of the session. This would the probability of price coming back to here to simply test it is highly likely, right? We have imbalances here. Might come tag these imbalances, fill these orders that are resting here, come through. You start seeing all these orders get pulled. They get pulled. Price flows. We hit the point of control. We start developing volume, and it either breaks out, retests, retest the value area high right here, and either keeps going, or we simply just come back into fair value. And that's it. It's not too hard to understand, because either price accepts the new price discovery or price doesn't, and it comes back into the value area. All right. So for scalpers, watch for imbalance, absorption, and then snap back to balance. So when we get out of these highs, look for the imbalance of shorts coming in and then a snap back into the value area. Option traders, extreme call and put premiums with no confirmation usually means the market is defending fair value. So when we get high premiums, but price is not budging, it means that there's so many transactions taking place, buyers and sellers, that they're actually fighting for fair value. And a quick checklist that I created for you. Is price rotating around the point of control in a high value node? Yes, fair value, right? If price is rotating around the point of control, then it's at fair value. That's the highest volume of the entire session. Is delta and CVD diverging while price stalls? Yes, expect reversion to fair value, right? Is price at the lows and then you're starting to see buys, and then buy delta and price isn't really moving? Yep, we're going to come back into fair value. Market tide balance, calls and puts basically equal, and do liquidity walls appear and hold? If yes, they're anchoring price at perceived value. So what does that mean? So if we go over here and we look at the order book right here, right? Does price come into here, consolidate, and does all of this hold, right? Did they keep reloading these positions as prices dilly-dallying around here? If they hold, if this line stays, the likelihood of price heading up is likely. Back to the point of control, back into value area, and probably settle right around this point of control. If we looked yesterday, price actually closed right at the point of control, right? Is that not fair value? Price closed right here at the point of control, right? So that's exactly what we've been talking about this whole time. We have extension, version back to the mean, settling at the point of control. That's fair value, guys. That's fair value. Don't worry about a fair value gap. Fair value gap is just imbalance. It's not fair value. All right. It's just aggressive on one side. It's not hard. Hope you guys got something. I hope you guys understand that ICT is just repackaged order flow. And if you guys really want to know what's going on inside the candle and not just guess, take a look into order flow and footprint chart.